And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And as always, the show where we bring you where the action is in the broader markets. One of the biggest weeks for the broader markets, very, very sloppy, however. And we did end on a rather bullish note. So let's jump right in and take a look at some of those data points that really drove price action last week. It was a pretty busy week with a lot by way of economic information. We did see core PPI data, and that came in less than expected earlier in the week. Good news there. And then also we did see core CPI. Now that number is more closely paid attention to, came in as expected. So the markets really yawned at that display. However, on Thursday, we did see weekly jobless claims decline. That was good news. And retail sales jumped. And I will share with you what part of retail sales and more as we move through today. But that really gave the markets a secondary boost so that we did end the week on that very positive note. However, today we did see housing starts plummet for the month of July. So we'll take a look at that housing area as well. So, of course, next week you will want to be aware Fed Chair Powell will be speaking twice. The FOMC meeting notes will be revealed, and then also the annual Jackson Hole meeting, which historically has been known to move the markets. That talk will take place on Friday. So let's go ahead and take a look at those markets and see where did we close for the week. And here we are. This is a daily price chart of the S&P 500. A couple of things took place last week that are quite constructive. We did see that RSI enter into positive territory. So we are now back above that net neutral 50. We can also see that the S&P 500, there's that Thursday gap up on retail sales, which helped recession fears recede. And we did gap back up above that 50-day simple moving average. On Wednesday, we were above it slightly as well. So subscribers to my MEM Edge report were alerted to that bullish price action on Tuesday, again on Wednesday, and I did put another report out on Thursday. So much to talk about relative to what really is exhibiting the most by way of strength, and we will get into that today. Also, with that moving average convergence, divergence, MACD, we did also experience that black line up through the red. And that is a constructive bullish movement. It is indicating that this downtrend during the month of July into August has reversed. Now on the lookout for that MACD to get into positive territory. Let's go ahead and take a look at the Nasdaq. Big mover as well last week, up over 5%, and same type of price action with gaps up on nice volume. Also, we do now have that RSI up here in positive territory. Today, the NASDAQ, actually yesterday, it did close above that 50-day simple moving average. So very good news there. Also, that nice MACD crossover, black line up through the red. So we are in very good standing with that RSI in positive territory as well. So let's go ahead and take a look at these sectors, and I'll really help you get your arms around which areas did outperform last week and relative to over the last several weeks. So here we are with a 2-month daily price chart view with those 11 sectors sorted by relative strength in descending order. Now, I will tell you that we do still have what I'm calling the leftover movement with these defensive areas remaining at the forefront. This is something I mention each week, that this view that I share with you is not whippy. It will be take time as far as escalating areas down in this lower quartile, moving up to the forefront, and likewise areas up here, eventually potentially moving down into the weaker areas. So again, up here at the forefront, utilities, staples, healthcare, and REITs. But let's go ahead and jump over to the areas that were top performing. And first up here is technology, up 7.7%. And we do see very similar price action as it relates to that RSI now in positive territory. And we can see we just inched up above this 50-day moving average 221.24. We closed at 221.4. And we can also see that we did have that nice MACD crossover. So very sharp recovery in technology. I'll share with you the strength and where that emanated from mostly last week. We did see nice outperformance in most of the Magnificent Seven names. Also up at the forefront, outperforming the markets, are consumer discretionary, another rather beaten down area, up 5.2% for the week. Here we are right up here at that 50-day simple moving average, just closing above it. We can also see that nice positive RSI and that MACD crossover. Lots of treasure hunting here because I will tell you a number of consumer discretionary names did come out with good numbers, but they faltered with the group as recession fears took hold. So from here, let's go ahead and take a look beneath the surface. You want to get a better sense beyond these sectors as to where that strength took shape last week with an eye toward capitalizing on that. So I have ETFs that I find to be very, very helpful in determining that. So here again, 2-month daily price chart view with that RSI sort. And up here, front and center, is IHI. Now, it did underperform at 2.5% on its gain, but take a look at that gap up into a base breakout. I am going to share with you some of the heavier weights in this IHI ETF because they are constructive looking charts. And then from here, let's take a look at another area that is in the throes of turning bullish. This is XRT, the S&P 500 retail ETF. And this is all about that retail sales data on Thursday, gapping up above key moving averages, now exhibiting bullish RSI with that nice MACD crossover. We'll take a look at a couple of names in that area as well. And here we are also with another group turning bullish. This is IGV, the software ETF, and again, gap up above key moving averages. Now, from here, when you are on the lookout for a downtrend reversal, you will want to keep your eye out on those shorter term moving averages. This is that 10-day moving average, and it is beginning to trend upward as it closes above these longer term moving averages, the 50 and that 21-day. That is called a golden cross. It is a bullish indicator, and you can see what does take shape as opposed to that downward trending, in this case, 10-day moving average acting as upside resistance. When we get that reversal, that moving average then begins to act as support as we edge into an uptrend. So keeping a close eye on that, we want to see a nice continuation rally shaping up. Also up here at the forefront, did fairly well, KRE, well, 4% actually, and that's quite well. But we can see also a late week rally here, putting that RSI back up here into positive territory. We're not quite ripe yet. We don't have that MACD crossover as confirmation, but I will share a couple of names from this area as well. Also of note, volatility. It continued to drop as the week progressed. We're now back below that 16 level and seemingly trending lower. And this is good news for the markets. We like to see that volatility, although it certainly felt volatile last week. Net, however, we are seeing the overall fear index decline. Here we are also with the view of small cap stocks. They struggled. It was not until the end of the week when those recession fears receded. This is one of several areas that fare well if there is non-recession fears in the market. And of course, the retail sales data and employment numbers did help banish that. So we can see a gap up. Small caps were up 3%, quite healthy, just entering into positive territory there with that RSI on the cusp of a nice MACD crossover. So lots of developments last week, certainly worth acting upon. So from here, let's go ahead and I will share with you some of those names in those industry groupings that did outperform last week. So first up, we are going to go ahead and take a look at some of these retailers that are on the move that had the biggest move. And certainly one of them was very much news related, and that is Starbucks, top performer in the Nasdaq and the S&P 500. Take a look at that gap up. Now, this is all about the company having been overtaken, or they did have some investors come in that wanted changes to be made, and they did. They hired the CEO from Chipotle. They poached him, and the news was very well received. So here we are with the gap up on that news. Take a look at that very high volume. And then subsequent to that very big gap up, I believe it was up 23, 24%. And we are retaining that gap up. We are not seeing the stock pull back. And that generally is quite constructive. We could see further upside there. However, let's take a look at some of these other recently down and out retailers that experienced pretty significant moves last week. And you'll get a sense of where some of the larger gains took place, certainly in retailers. A lot of these names that are very oversold. This is Nike and KE, and we can see a gap up on that retail sales data. We are now back up above that 50-day simple moving average. And Nike is also very impacted by what's taking shape in China. And Chinese retailers came out with good numbers that also helped Nike as well. We now have a positive RSI and a positive MACD. And conceivably, we do have room to run because your next area of possible upside resistance is that 200-day simple moving average. I did want to also share another area that fared well because of the retail sales numbers, and it is going to be auto related dealers because that really strong retail sales number was all about auto sales increasing. So what we can see here with Carvana, CVNA, this nice base breakout into an uptrend, MACD crossover confirming a new uptrend, and a positive RSI. Another auto dealer you may be familiar with as well, Carmax, KMX, not as constructive looking of a chart, but certainly a gap up into a near-term uptrend. On the lookout for that potential MACD crossover. One other name, and this is the biggest, certainly the heaviest weighted name in XRT, that retail ETF. This is Sprouts SFM. Gap up on earnings, pulled back orderly to this 10-day simple moving average, and potentially on the move higher. This is a retail grocery store, somewhat similar to Whole Foods. They do a lot with natural type foods. They are on the West Coast. There is a store quite near to where I live, and it is very high quality and nicely orderly and well received as far as always being quite busy. But we can also see that this chart is looking quite constructive here. So from here, let's go ahead and take a look. I talked about IHI, and that's the medical products or medical devices ETF. You can see that base breakout from here. We are going to look at the three of the heaviest weighted names in here. And first up is Intuitive Surgical, one of the top weightings, ISRG. This particular stock is on my MEM Edge report, was suggested as a buy back here. We held on through this pullback, and you can see that it is continuing to march to new highs. So certainly a leadership name in that space. Another stock that is a heavy weighting that is beginning to potentially reverse its downtrend. This is Stryker, SYK. You can see that nice reversal, a move up above that 50-day simple moving average. RSI is positive, as is that MACD with that black line up through the red. Last up here, one of the heavier weighted names in IHI, Boston Scientific. Now, this is a stock that was on my MEM Edge report. However, we did get shaken out upon that close below that 50-day simple moving average, and am very strongly considering adding it back, quite simply because we are now back up above that 50-day simple moving average. We have a positive RSI and a positive MACD. This pullback here was earnings related, but very, very overdone relative to their fundamentals. And then also KRE, another area that I mentioned, had a nice move. This is also an area that will fare well as recession fears recede. You can see that it definitely got overdone. KRE, that banking ETF, this rally into the end of July got us into an overbought position, but we are seeing some names begin to emerge and come back into favor within KRE. And let's go ahead and take a look at some of the bigger holdings in this regional banking ETF. This is COLB, Columbia Banking, and you can see it really ran here for that month of July, also pulled back sharply going into August, but we are in the throes of emerging from this flat base. You can see that your RSI remained positive throughout that pullback, on the lookout for a MACD crossover, but note that this is a very volatile stock within a recently volatile area. So let's take a look at another name that is a top weighting in KRE, that regional banking ETF, and this is Western Alliance, WAL. And you can see that it did drop. This was all about those recession fears, and it did wedge up beyond that. Now we are back above this 21-day simple moving average, positive RSI, on the lookout for that black line up through the red for that bullish MACD crossover. And then we are going to take a look at IGV, and this is the software ETF. Really fell out of bed here. You can see that sharp decline that we went from that 89 level down to 70, but a nice V-shaped recovery. We're back above that 50-day simple moving average with a bullish RSI. And I will tell you, within the software space, there are over 310 names, and there is an area that's emerging yet again as a leadership area. That is cybersecurity stocks. Ticker symbol FTNT, Fortinet. They did come out with earnings, and take a look. Now you can use this chart as a guide for some of these retailers that are coming out of an oversold position. On the lookout, potentially they are going to begin reporting their earnings. In fact, we'll take a quick look at Walmart here too. They gapped up on earnings last week, but here we are. FTNT is a top cybersecurity software stock, and we can see that gap up that took place on very heavy volume the prior week, and then a nice continuation rally here that is keeping that group in a nice uptrend. And then also some other cybersecurity stocks. This is one that I wrote about earlier this week in my MEM Edge report. CYBR, another stock having a very bullish response to earnings and entering into a nice base breakout with bullish momentum indicators. Last up is a stock that really got punished last quarter, or 2 quarters actually ago. We can see this gap down on earnings, but it was all about the company announcing a product reshuffling as much as anything else. And it did, and it is having a V-shaped recovery, very similar to the overall group. This is Palo Alto, another software security name. Now, I did mention to you that I would share with you a chart of Walmart, and here we are with that gap up, very big volume here, nice bullish characteristics, black line up through the red. We will want to make sure that the stock does not close below this gap level at 71, and so far so good. We are retaining that gap up, nice heavy volume, and it's looking quite compelling at this time. And last up, I do want to share with you a view of the equal weighted broader market indices. So first up, we're going to go ahead and take a look at the Nasdaq again, revisit that gain back above that 50-day simple moving average, and then positive characteristics on those momentum indicators. Let's take a look at QQEW, and this is the Nasdaq 100. So you need to know that it's not the broader Nasdaq. Nasdaq 100 equal weighted ETF, and take a look. This equal weighted ETF is back above that 50-day simple moving average in a more decisive manner with a positive RSI. And this is what we want to see. We don't want to see heavy, those M7 names leading the markets again. We want to see more of an equal weighted broadening out move into these markets. From here, we'll take a quick look at the S&P 500 equal weighted. This is RSP, and another view here with that gap up and bullish both on the RSI and the MACD. And from here, we can very quickly compare that to the S&P 500. So again, both of those equal weighted indexes are looking quite constructive, and that is quite encouraging. So as mentioned, we are seeing very bullish characteristics in the broader markets. And next week, we're going to be on the lookout for comments from Fed Chair Powell. But the good news is we are seeing that volatility, that fear index recede. So that is good news. Lots of good news overall. If you haven't already, use that button below to trial my twice weekly and, if needed, alert reports throughout the week for my MEM Edge report. And if you like what you've seen, go ahead and hit that like button. I'll look for you again here next Friday.